In our Stocks to Watch episodes, what we do is talk about the companies that we're interested in based on what's happening in our economy, what may be happening on the stock market, what may be happening in the US market, or just about anything that may have an impact on how we make investments, right? So this is usually where we just meet as persons who are investors, analysts, just about anyone who is interested in the space, and just share from our personal opinions. This is not professional financial advice, but it's meant to be a meaningful discussion by just a group of friends, and we'll see where it goes. So let's get started.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right, welcome back. Let us pray. Thank you, Lord, for this day. Thank you for the ability to produce wealth. We pray, Lord, that this will be a meaningful discussion, one that is, meaningful and impactful to all. We pray, Lord, that you'll give us wisdom, knowledge, and understanding in Jesus' name. Amen. All right, it's definitely good to see everyone. It's been a while, all right? So let me bring on some of my friends here. Matthew was here first. So, hey, Matthew, what's up?
Hey, Jermaine, what's good?
All right, not much. You're a little low for me. Guys, let me know if you can hear Matthew just fine. Let me know if you can hear me fine, actually, as well. All right. Hey, David, how are you doing? Okay. All right, David, we're not able to hear you. Let me know when your audio is ready and we'll bring you back on. All right. All right, so we're waiting for Chike as well, and David is working on his audio. So we'll just jump right in. Matthew, just say a little bit about who you are, just in case there are persons joining us for the first time. Then I'll explain the format, and then we'll, get right into it.
Okay, no problem. So my name is Matthew Preston. I am a medical doctor. So, I don't know. I don't know anything about finance. I'm just trying to learn like everybody else.
So you talk about companies like Indies and Image Plus and Elite.
But yeah, I love finance and stuff. Started learning about it a few years ago. I love investing. I love investing on the Jamaica Stock Exchange. And I'm just here to hopefully talk about some stocks that I'm interested in, or I think that people could possibly look at, the reasons why, and yeah, just here to have a good time.
All right, thank you for being here. He's one half of the Limitless podcast team. I would say the better half, but won't get there. All right, so since it's just the two of us, Matthew, what I'll do is just kind of explain the format for everyone until the rest of the guys join us. But what we do here for Stocks to Watch, we kind of try to take a look at what's happening in the overall investment space first. And this is actually quite an interesting time, right? Because we're at a point where we've seen some interesting things going on in the space, right? Controversy, cyber attacks, delayed financials, a whole bunch of things, right? And we try to stay away from certain things here, but what we want to do, at least for the first few minutes, is we always try to set the landscape, right? What's happening now? What sort of climate do we have to invest in? So I'll ask you, Matthew, what are you seeing now in terms of the overall space, whether it be the economic landscape or just the investing space in general, that is what you're thinking about as you're trying to decide what to invest in?
So I mean, right now, I guess I'm seeing a lot of doom and gloom. There's a lot of people, there's lots of headlines in articles that are saying, oh, the JSC or, investing, all these things are down. There's a lot of what would you say? So there's a lot of um, what's the right word for this? There's a lot of controversy. You know, I mean, I don't even know how much to say, but I mean, even for example, certain companies are getting hacked. Certain um, people have been supposedly scammed, I guess, and things like that. So I think that is contributing to a lot of the overall pessimism. And then you have certain stocks have been falling in price. So, and then especially those stocks make up a large portion of our market because they're pretty large companies. So overall, the market, as people say, overall might be down. So yeah, just a lot of doom and gloom because of those things. But I don't like to think like that. I like to look at the positive of a lot of things. I try to be proactive instead of reactive. So I think that well, almost any time, even though there's a difference a lot of times between the reality and what is being said. So what is being said right now might seem very doom and gloom, but in reality, if you look at it, I think Jamaica is poised for a lot of growth right now, especially our stock market and a lot of the stocks that are going on right now. There's a lot of things that are going on are things that could happen in a lot of companies that I think, coupled with the fact that their stock prices for some of them are going down, presents an opportunity for a lot of us. It's just I think this is the time where a lot of real money can be made, but you have to pick the right stocks. You have to pick the right industries, which I think a big part on that is based on your research. So I am a big lover of research and learning. So I think try not to look at the general advice or whatever. Try not to just look at what is being said. Try not to just look at the headlines, but look at what is actually happening. Go a step further. So there's different levels. So like if you just read the headline for something, go the step further, actually read the article, and then not even just read the article, because remember, sometimes these articles are taken from reports or actual official documents that are put out by companies. And sometimes the reporters and stuff like that, when they're human just like us, they can make errors sometimes. And if you actually look at what is really going on, sometimes you'll be able to see that gap, like, wait, they think this is happening, but in reality this is actually happening, which could be actually a good thing. So yeah, so I'll just say, guys, do your research.
Okay. All right, interesting take. I have some thoughts on it, but I'll get there a little later. GK, you're good to go?
Let me see.
You're a little low.
No, all of a sudden you went off. I'm not sure if you
Perfect.
guys are hearing me.
Yeah, man,
Yeah,
we're
we're
hearing
hearing
you.
you.
Don't know why.
Can't see you though.
Hold on. 1 second.
Seeing is believing, so we can't see you. We don't know if it's Chat GPT talking to us.
Can you hear me now?
Yeah, man, hearing you.
Yeah. Right. Hi again. Good to be here once again in a while.
Yeah. So what are you seeing in terms of the landscape now? Anything that's going into your investment decisions?
To be very honest, I've actually been out of the market for a good while. No, being that just other work at a time. I caught a piece of what Matthew was saying in that the only part I really agree with is, well, actually there are two parts. Is you're gonna have to do your research very nicely right about now. Um, as to the market, you're gonna have to take a zoom out approach. Now, the truth is, in a down market, or not the truth, but in my opinion, in a down market is where you make your money. But then you have to have the patience to take on a down market, in terms of you have to know that when whatever you're picking, you're gonna have to give it its time of day. I've always said that from before. So there are things that are happening in this market of itself right about now with respect for Jamaica, but at the same time, we're nowhere out of any woods. So there are all of the different headwinds that are coming against us. I still continue to say that we really go the way of our biggest trading partner, and that's the United States. Their policies, what they do, etc., in terms of their central bank and so forth. I fully believe that we are too much hinged to what they do, and any attempts to disconnect ourselves from them will be very short-lived. You know, most of our industries. Let's think about it. The way how we, the way how you're gonna earn money. Most of the companies earn money in this country is based on the fact of the persons that live here, right? So if the businesses and so forth that are depending on us in terms of our income, because the circular flow of money, right, is depending on us, and they haven't expanded or continue to expand in other markets that are not tied to Jamaica and will not be impacted accordingly, then you're gonna go the direction of wherever the Jamaican economy goes and how much money is in the Jamaican economy at the time. And where's the Jamaican economy right now? You're in a high interest rate market. You're in a situation where, with specifics to equities, that stock, it's unfavorable. Because why is that so? The risk to reward about equities at this point in time, in the general textbook sense, our teachings, states that when interest rates are high, investors seek safer waters. So why is that so? Because it's just better risk, or lower risk, I should say, that you can pick up on a benchmark note, on a treasury bill, on a certificate of deposit, etc. And that's technically where some high level investors, the institutional ones as well too, who need somewhere to park their money, have been going. They've been going into government instruments that they can get, what they believe, I should say, more secure in terms of risk, um, to reward in shorter time period. I use this in quotes. I use this word in quotes. Guaranteed, right? Because nothing is really guaranteed. Things don't have to go the way you plan out. It's all about time frame. And equity, our stock market, you really is depressed. We've seen what it is. The main index is depressed. The junior market has a couple of companies that could be poised for stuff going on, but based on where we were 2 years ago, with all the euphoria and excitement, we're no longer there, because what has happened is the market has gone through what is just the natural economic cycle. It's just what happens, right? Money gets zapped out to the economy, out of people's hands. You have less disposable income and so forth to be doing, or discretionary income to be doing grand old things like buying stocks and so forth. So I look on the market presently where the money is more than likely to go. So when we get into that, I'll give my thought process at that point in time on where I am looking at, or I continue, I should say, to look at, and it really hasn't changed in terms of my viewpoint. If you look at back on the last time I was here on stocks to watch, it really hasn't. All that happened is that the economy got more compressed, in my opinion, with respect to money inside of it, and the focus even more went to the companies I was looking on. So yeah.
All right, cool. Thanks for that. I'm trying not to say anything too much because I don't want to lengthen this part, but I'll just say to what you were saying, Chike, that I think for people, and this is what we tell them, right? We tell them to, or at least what our stance here is on Learn, Grow, Invest, is that investment or investing is a lifelong thing, right? So regardless of what's happening in the economy, there are always opportunities to invest. And I think that's kind of what Matthew was alluding to a little bit. Um, so to me, it may not be where it was before, but the expectation is that you are investing for the future, not necessarily for the present. So if it's not favorable now in terms of high interest rates, all of those things, what are the companies, or at least for me, I'm looking at what are the companies that are positioned for my personal timeline, which I typically say in the group that I'm investing ideally for a 3 to 5 year time horizon, right? So if though I'll take advantage of short-term opportunities that are there, my mindset is if I'm purchasing a company, if I'm not able to touch my portfolio for 3 years, I'd be comfortable holding that company for 3 years. So to me, there are some companies that I'm looking at now. I think whether you or Matthew was alluding to it, that to me the prices just seem like really good right now. So even though the market is not necessarily a hot thing, I can say that it seems maybe there's decreased interest. You kind of see it in general in terms of people kind of like the whole buzz that comes around with an IPO, and we'll talk about that later. Or just there hasn't been much activity, and the last one we've had was SSL, which has kind of put a damp on everybody's mood. And so I mean, but to me, investing is something that I've been doing throughout the last 6 months anyway. I'm just thinking that maybe in a 12 to 18 month window, I'd like to get, some sizable positions, which is what I always say. And so I'm looking to come out of that period in a much better position than if there was not this market that we have now, where some companies were actually, in my opinion, overpriced. I don't think I could say that about the overall market anymore. Probably a handful of companies might be overpriced now. A few years ago, a lot of companies definitely were overpriced. So it's a difference where it actually makes sense, where you can get companies now closer to fair value, or closer to what would be considered a reasonable investment, and you're investing in the future of that company. That's kind of how I see it. In terms of in general, I'm just seeing where I do think that persons are kind of taking advantage of other opportunities. I think we're talking about this in a group where there, and I think Greg mentioned it the last time that he was on, that he's saying that there may be some short-term instruments that persons are looking to. We saw where there was a few bonds that were released on the market. Mayberry did a bond. I think VM did a bond. NCB did a bond, which would have taken up some capital, of course. But I think that maybe some persons would have looked to those things. But it could also be that persons are still, I guess, adjusting to life post-COVID, meaning maybe their investment portfolios don't have the same attention. Like, I don't know. I think I'd love to kind of hear from our community members on this. So persons watching, are you investing in the same way that you were 9 months ago or 12 months ago as you are right now? Because that's what I think I'm seeing more than anything else, where maybe the volume of transactions aren't the same, but I think there are, persons like myself, like some of you in the chat know that investing is just a part of your lifestyle. So you're going to be investing regardless. There may be some persons who are only interested when it's some sort of offer or IPO out, and then there's some that may be investing when they feel compelled enough to do so. We do have some offers coming out of the market. I'll mention the ones I've heard about later on in the show. But yeah, I wanted to share that before I bring David on, because I'm sure David can bring some context as to what's happening. David, how are you doing?
Can you hear me, Jeremy?
Yeah, man, hearing you.
Good, my headphones actually working. But yeah, so it's been a pretty interesting period to say the least, because you know, liquidity is technically coming, or I should say, getting into a crunch. Because a couple of months ago, some stocks, had too many buyers that on any given day, you can have potentially sold that stock in out having to about, in a massive loss or a massive reduction in profitability. But now you have to like more judicious and understand what the potential future demand may bring way into the stock. For example, I remember I think it was before
One
and even
one
yesterday.
sec, David. You're going increasingly lower. Um,
Oh, is it better?
yeah, much better, much better.
Yeah, a little tapping. Yeah, so even yesterday, for example, the Kingston Wars, after, a particular set of trades, there were less than 10 orders remaining in the buy queue. And, even dollar, recently we saw a dollar, at national escalation, there were less than 20 orders in the buy queue. And why does that matter? People should remember that when it comes down to stock, when you buy a stock, you're exchanging cash for ownership. When you want to exchange that ownership for cash, there needs to be buyers for you to actually get access to that cash. And if you are buyers for that stock, it means that your ability to actually convert your ownership into cash is much, much used. And if someone recognizes that, they can take advantage of that, their benefit. So instead of that person buying a stock for, let's just say, $10, they can potentially just buy it instead for $9 or $8. And that's what we're kind of seeing in some stocks right now, especially in the main market and for others. You have smart investors who actually have the capital, or in this case, cash, who realize that some persons want to exit some positions. They potentially see a rebound in the future, but the investors in the current day need the cash for other purposes. So they're willing to sell to, tend to their own devices. And Preston mentioned earlier about interest rates. And let's take it very simple. Some persons here have mortgages. Some persons here have a car loan. Some bank, said, hey, in raise on car loan come May 1. I thought somebody recently they said that, their bank or DTI, send them like 17 emails in a day because their usual standing order was for the old loan payment. And now it's an extra 10 grand per month. If annualize that, that's an extra 120K over for the year going towards your bank and your loan. That's less money you can actually use the stock market, for example. And if you have a mortgage, the persons are being quoted an extra 20 grand per month. No, 140 grand per year. And what the person could say, oh, you can just trade away out of that. You can trade away to get the income to cover that expense. No, but what about next year when you still have to pay that same elevated rate? So like there are multiple factors impacting, individuals because inflation impacts persons differently based on how they live their lives. You can cut back on certain things as desired or needed, but as human beings, we still need to eat, sleep, have shelter, and just operate in a normal sense. So, that means potentially getting when on a public transportation or, just generally surviving. So the reduction in the market activity, is just a reality of the environment we're in. Because even some of the equity funds, the unit trust, most of them are done double digits so far this year. And even some of those funds are potentially holding on to the cash that investors are, buying through the issuance of units and putting it into higher instruments right now because those fund managers are potentially waiting more cautiously evaluate things before they actually buy certain assets because remember, if they actually buy a stock now and from the unit trust, for example, and some of the stock in that constituted unit trust goes on further, that's less management fees that they actually get in their pocket. So like right now, for me, to be honest, my JSC activity has reduced, and I also reduced I speak to the frequency of trading, not necessarily the trading in altogether. It's more so just the frequency. So it was like last year, probably we're taking the JSC daily and just up and down, see what these are there in the market. Some days, some weeks, no, like I just go on the JSC after hours, or when they see something in the group, I probably go and look at it, but I probably won't trade it, and that's just because that there's value being traded right now, and on that same breath, the spread on certain stock or the stock in general are getting smaller. What does that mean? When my bidding for a stock at $2.50, and let's say the stock could go to $2.75, 25 cents on $2.50 is like 10%. No, that spread is probably shrunk even further to probably best of $2.50, and the most could probably fill it for is $2.60. After you account for your 2% in overall fees, you're left to basically not for, a large amount of risk. And I think you kind of hinted at it earlier, in the sense that the risk to reward ratio is significantly declined. So, whereas, last year, you had the opportunity to take what you call a calculated risk and be on the right side of the equation, that is considerably gone down. So, right now, I just want to market and look at specific deals, take advantage of them, and make sure that it's double digit return and leave after. So, a couple of weeks ago, there's a preference share that actually had a massive sell order by, just an investor. I picked a preference share, not variable rate. So that
Yeah,
person,
you're not talking the JP 7%. Is not that one.
no, 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 no. I like taking advantage of deals where I do have to be crying if my trade goes wrong. I mean, money in
Okay.
the on the JP 7% preference share, but that's the preference share I'm talking about. One of the
Okay.
epic preference shares was the epic preference share. Somebody was selling a good profit for like $15.50, like around that range. And this preference share is maturing in 2026, which is about 3 years away, right? And the par value is $20. So that's like at least 20-25% discount just before maturity. So, I got advantage of it, bought some shares, and, now, about a week or 2 weeks later, I was able to realize I probably like 15%, 20% gain on it with no difficulty. And, I have a friend, he got a good chunk of it, and he said that, he's not selling because part of the dividend he's getting right now works out well for him, and he bought at a significant discount. Even when it does mature, he still be relatively better off even if factoring inflation. Like I've taken advantage of a number of preference share trading below their par value and just, selling back at maturity. Even back in January, I got CAC 9.5% preference share at 90 cents. And by the time I traded at $1, I got an initial 10 cents every share I bought at that point. And and it came on to even end of month, end of quarter opportunities. Like that's amazing. So I took my money that I needed to pay back on a particular facility and I into some properties on March 24. Because somebody was selling the stock at like $6.25, I believe it was at the time. And that was the week before end of quarter. And I said, no, this is a great opportunity. So I bought a good chunk of it at $6.25 and March 31, I sold most of it at $7.40. So 8% net after fee in 1 week. While some persons could have said, get another stock, this, that. Right now, to be honest, if I'm collecting double digits for or maximum focus on the JST market. That's what they're use
So
up at some point.
it
I don't
it
mind.
sounds like you're making the point that Matthew was making, though, David, that there's still opportunities on the market now. You just have to know how to see them.
Seeing them is one thing, but also, you have to have patience because some persons would love to trade daily, but it's not going to necessarily be the same case in this environment. The best thing you can do for yourself sometimes is just sit back and go watch a movie or just read a book. Like the everyday, oh, I can make a 10% or a 5% here, whatever there. It's not a
Mhm.
parallel. And even if you do want to try and take on those risks, is your money really being justified by the risk you're taking on?
Mhm.
Because as you buy the stock and potentially look for exit, person that puts in an order to buy a stock at a higher price might not put in a significant amount of volume or volume for that order. So, for example, let's say you bought 10,000 shares at $2 and the stock is trading at $2. Somebody's only buying 3,000 shares at $2.50 and then the remaining 7,000 after that $2.20. You're not going to realize that massive 5% gain is going to be a lot lower. Like that's kind of the perspective that I'm looking at right now. Trying to make a highway and was a good opportunity I made recently, but the opportunities are
Still,
less.
it's still a good opportunity. I've been talking about that company for like 18 months now. We'll get there, I'm sure. But I was gonna use that as an example that there are opportunities that if you're patient, because a lot of people were looking at that company. I remember when it just got to IPO price, people were celebrating. A lot of persons were probably waiting to exit at IPO price because they're like, 2020 have been holding over a year and not seeing anything. And those kind of statements make me wonder if a person is detached from what is happening around them. March 2020 was not an everyday occurrence. Like it wasn't business as usual. So, but I guess there are persons who thought that Trans Jamaica might not have been, fairly priced at 141 or anything like that. But I mean, I'd ask them what type of company they're looking at, right? So when it was, 120, around those levels, I thought it was a great opportunity. And I think January 2022 stocks to watch, I mentioned that Trans Jamaica was definitely something to consider, especially at those prices. Um, at the time, I think we knew about the project to be completed. I think it should have been. It was estimated at the time to be what, May or June this year, I believe.
Yeah,
Yeah. So
no,
yeah,
like
man,
you have
continue.
to have
I'm just
patience.
saying that I think.
You have to have
Just,
patience.
yeah, go ahead. Go ahead. Mhm.
No, that's just you're saying it right. You have to have patience sometimes with some stock, not because you can look at other opportunities around you, but realistically speaking, there are different seasons, and sometimes persons are going to make their gains through waiting. Some
Yeah.
persons saying, "Hey, you could make a this amount of gain in the short time," but the thing is, some persons realistically speaking enjoy having their days as they like leisure. So they don't want to be
Yeah.
looking at the market every day saying, am I going to make enough money to actually pay my bills?
Yeah. I don't. I don't.
First
I don't
problem.
think. So I don't think that. I think if you're down on a company, if your assessment of the company has not changed, I think it's better to stay in that company than sell if you don't have something better to do with the money. If you understand what I mean,
No,
right?
I get what
So
you're saying.
yeah, I mean, I don't know what you guys think about that.
Let me change my head. Let me just turn my headphones off. Give me a second.
If you've done your homework,
Yeah, man.
like
Assuming that there's nothing that.
I'm gonna just laugh a bit. Forgive me, the blunt cynic. I'm gonna laugh a bit because I
That's
remember
why you're
very,
here.
I remember very clearly when we continue to have these discussions about certain companies. Like let's take Trans Jamaica for instance. Let's take Wigton for instance. Everybody, I've always said it. everything, if you've picked something because you've done your homework, has its day in the sun. And I've always made no bones about it. I'm not a gunslinging trader. You can't beat the traders as far as I'm concerned, no matter how you think you can. Why? They've got access to the platform as rudimentary as JSE's platform wants to be, I'll say it as it is, compared to United States platforms that you can, TD Ameritrade, Interactive Brokers, etc., that you have nice things such as stop losses and take profit actions and so forth that JSE doesn't offer right now. You still can't beat them like that because they've got access to the full on suite of not just JTrader Pro, but the actual broker side. Secondly, they've got access to the data that you have to be doing way more work to. They've got analysts, they've got an entire a room full of people that are dedicated to making these moves accordingly. In our market that is small, your best option has always been, first and foremost, patience. First, to do your homework and then just take your time and wait, right? Now, Trans Jamaica is technically textbook in terms of how long it took to get there. But for those who had the patience to do just that, they've reaped the reward straight up 100%. They've been able to achieve it, right? And it's not technically done for them because, again, companies like Trans Jamaica, we have their prospectus with extreme detail that outlines well into what the next 5 years, what
Up
the
to like
company's
2032
performance,
or something like that, right?
what the company's performance should be. Now, it's bold because guess what? As an avid investor, it's bold and trying to make a side because as an avid investor, you get to hold the company accountable. There's no song and dance. Oh, we think we might be doing this next year. It might, but no. They were straight up. We plan to be doing X, increase revenue by Y, and we also plan to increase our payouts based on the fact that we believe the company's performance will allow it. And it's right there. The percentage that it's supposed to change from in 2024, 25, and onward accordingly. Now, all that is left as an investor that has done their homework is for you to wait for Trans Jamaica to do what it's supposed to do based on the prospectus that they put out from the start. And you get to hold them accountable. Additionally, as well, too, you also have benefited significantly from solid payments of dividends. So at the end of the day, like that's what you want a company to do. You're either getting capital gains or you're getting income from the dividend payments or capital distribution. And all that is required to do so is patience. You keep saying, or should I say, you keep seeing it, but people just don't like to. They don't like to be. I would say this way: they don't like to be challenged about the thought process that their their methodology, is not the most accurate or the most beneficial. So telling somebody to just buy a good company and set a timeline that you're looking to get a return. To do so when the rest of the market is running around going, oh, we should buy this stock or we should buy that stock or here comes this quarter, that quarter, whatever. And then fear of missing out, FOMO starts to run in and people start to feel like they're missing out. All the while, the trajectory of the nice little stock that they bought, or the company, as I like to say, that they bought with solid financials and steady performance, nothing hasn't changed. So maybe the price went down because some investors didn't care about it too much anymore and they needed some cap. That's the opportunity to buy more. As you rightfully just said, Jeremy, if nothing has changed about your company, it's still performing, but the only thing that happens is a depressed stock price, buy more. Because some of the best investors have made most of their return on on buying good companies, especially when the price goes down. The common statement is, if you liked it at 100, you're supposed to definitively like it at 50, right? Because if nothing else other than the stock price has changed, nothing else other than that, it's still giving you solid income, solid dividends. Let's think about that. So you bought the company at 100, it continues to pay, say for instance, $100, and it continues to pay you like maybe a 50 cent dividend every year, right? But then some bad news comes out, and the company now drops down because a bunch of investors get skittish and dive the price to like $60. But the dividend still stays at 50. They're still paying all this time. Are you not calculating dividend yield? Are you not seeing that that has improved for you significantly if you buy at a lower price, that nothing else has changed about the company fundamentally? That's the thing. Ignore all the
there,
noise.
there are persons. So I've always felt like, so I'm kind of skewed towards dividend in a sense, but I've actually adjusted my outlook to say, well, if a company, so there are opportunities for both. If a company has the potential to give me both, even better. Meaning, I would take. I mean, you guys don't know how I feel about dividend yields in our market already, but I would take um, a really modest dividend yield like a Trans Jamaica, and I say it's modest because I still think overall the market should be a lot better. But I looked at it as one of those companies that gave you an opportunity to realize both because of its value at the time. So I don't want to spend too much time on Trans Jamaica though. I just wanted to highlight the dividend details since we're talking about them, and then we'll actually get into our picks, right? Because that's why everybody is here. So let me find it. But we haven't um, try and say you're on a rant, GK. I think he has forgotten who you are. This is
Apparently, he
standard
really has
GK
forgotten who I
behavior.
am.
Standard GK behavior. All
But
right.
yeah,
So
like
it says here. So we understand that the company will pursue a dividend policy that addresses the company's working capital needs, any other investment needs in accordance with the concession agreement, good practices, so on and so forth. Based on this policy, the company is projecting dividend yields based on offer price, right? Ranging from 5.3% to 8.7% in 2020 to 2025, average of 24.5 to 35.8% thereafter, and then an overall average of 18.8% and to 27.8% for the total period of 2020 to 2036. So you can essentially calculate what that yield would give you in terms of a dividend and look at what the potential dividend payout would be for up to the first 5 years, which we're 3 years in, and then an average of 24, almost 25% to almost 36%. So you're pretty much seeing that they're able to give you some idea as to what the dividend will be for the first 16 years of the company being listed. So
And,
it shouldn't be a surprise.
well,
and stick up in.
they give me a timeline up to the maturity, not
Yeah.
maturity. They give me a timeline up to the term of the concession. Actually, that's what you mean.
Well, stick
Yeah.
up in. Stick up in, and I'm sure you all will agree. Tell me if they continue to perform just far it hasn't changed. Notice sticking point is upper price.
Yes.
Anybody that has bought significant units, this doesn't change. You tell me which part in any part of Jamaica they'll ever get a return on any kind of security that gives them 24% on average yearly. As a matter of fact, this would be better than performances on some world class exchanges as well, to instruments.
I mean,
So,
it's just based on the nature of the business, though. And the key point here, as we mentioned, the offer price. So we are assuming that the offer price will not stay the same. because this type of yield will be attractive to some investors. And as Jerome pointed out, the company's profitability on a whole has changed. So that's also something to consider. So I don't think it will remain in the ballpark of the offer price. I think it ended today at like 230. I don't like to give predictions on price because anything can happen, but it's doing well, and I don't think these yields are gonna hold. So we need to revisit that. I'm hoping that they'll give us an updated yield projection based on where the price is going into the rest of this year or next year. So that's one of the things, if I'm able to interview them, I'd ask about. So yeah.
Jermaine,
Yeah.
so to just add some further context before cover a little bit a little bit on TJH for a bit, but
Yeah,
what
man, too
person should
long.
remember is that TJH is basically paying about 80% of TJH's expenses was related solely towards GIO. So TJH had the concession, and GIO was basically the sub-concessionaire or the subcontractor that did most of the actual heavy lifting. Okay, we check out TJH's actual annual report. They said they have about 7 to 10 employees, and the rest of the employees are really basically GIO persons. So like whenever you go to the toll booth, for example, it's not TJH, staff you're interacting with necessarily. It's really the GIO staff. And what people need to understand is that the expense didn't go away. However, what has happened is that they've restructured the actual charge that GIO was getting from Trans Jamaica, and on top of that, they have also they got 50% of the company, plus they have the option to acquire the remaining stake, pending the changes to the constitution with NROC. But the expense that used to show up on their P&L is no longer there.
Yeah.
Because the thing is, they actually pointed that when they did some surveys comparing other infrastructure assets across the world, they were paying a significant premium, and they're saying that based on this one transaction alone with GIO, we're looking at $12 million US annualized in savings. No, in any perspective, that is insanity. But at the same time, it's gold, because I'm just going to bring up, so Jeremy, can you bring up the TJH Q please? March
Say that
2023.
again. Oh, the Q March
Yeah,
20.
yeah.
One sec.
Because the thing is that when person was saying that TJ's profitability was always poor, that was a function of how TJ's is structured, because since they actually have the right to operate the highway, their intangible assets has always been amortized or basically being considered an expense, in their profit and loss. However, this isn't actually a cash expense. So if you look at TJ's actual cash flow versus his actual
Where
profit and loss
where you
statement,
want
it's an
cash flow
entirely different
statement?
ballpark. No, income statement.
Okay.
So as you can see, there's a significant jump in profitability for TGH in Q1. And that's not just a function solely of increased revenue, but also a function of that expense no longer being there. From 674,000 US dollars to 4.98 million US dollars year over year. That's crazy.
Yeah. Yeah.
And the thing is, when you look at the actual operating expenses, just the operator fees alone last year, the fixed fees was 4.43 million US, and the variable rate fees was 4.44. No, sorry. The operator fees, the variable ones was 451,000 US dollars. So call it about 4.88 million dollars last year alone, just to the operator expenses, and that is no longer showing up since they actually consolidate their financials now, which removes GIO's expense. And as I pointed out earlier, $12 million US annualizing stable expenses. They're planning to have at their AGM a resolution to give them the right to an open market share buyback. They're looking to do
That would be
the
interesting.
they're looking
Did
to
they
do
did they talk about an amount for that buyback?
no. So the articles currently restrict them to doing a share buyback via tender offer. They're seeking shareholders to approve an amendment to their articles, which would allow them to do an open market share buyback versus a tender offer.
Mm-hmm.
So they would actually have their ability to do a share buyback. It's not a guaranteed thing, but we give them the ability to do it. And because we don't have any restrictions like in Trinidad with the share buybacks, they could get started with it as soon as the articles are sent to the company's office.
Okay.
And we also need to remember that TGH has the interchange lanes coming up and all these other plans in train. And phase 1C, which is supposed to really kick in full gear into their P&L come 2024. So they have a long runway ahead. And with the fact that they want to extend the Williamsfield to St. Elizabeth,
Yeah.
and they have to develop any of that, and they're just operators basically. They have a very strong future, which is why they can project such a strong cash flows.
Yeah.
Because when you have this kind of developments, you effectively connect the country in such a way that persons have no other alternative but to use your option. Because before we had the North South Highway, it used to take about 4 hours, not 4 hours, like 6 hours sometimes and more to reach Montego Bay from Kingston. Like, I know the Express is just now, call it almost about 3 hours.
All right. So that's definitely a long build up to our actual picks. So thanks everyone for that. What we'll do is we'll try to keep we we actually don't want to ever make kind of short circuit the discussion in any way. So it's actually so it's not a bad thing. But in the interest of just trying to maybe have the discussion a little bit I guess engaging, what we'll do is try to set a timer, right? So I'll say let's try to keep the discussion on a company from this point on to maybe 8 minutes. So when we get to 8 minutes, whoever is talking will wrap up. We won't add anything. We'll just move on. Cool, guys.
Yeah,
Good.
sure.
That's good.
All right. So let's do our own. So let me introduce this part to everyone. So what we do for when we actually get to our picks, each person will say a stock they're watching and why, and then the rest of us will chime in and say whether or not we agree or we disagree and why. Right. So I'll ask Matthew to kick us off. You're not allowed to say JFP. The chat has it that that's one of your favorites, so you can't say that one. You have to say another one, and then we'll go around the group. All right.
Okay. Um, so let's see. I'll actually pick Dollar Financial.
Okay.
So I know
Why?
that's probably one of your favorites too. So I mean, for Dollar
Who?
Financial, you.
Okay.
Yeah, for Dollar, right? They have had ever since listing last year May, they have had they've really grown a lot. So if you look at it, I think when they listed, their loan book was maybe like 700 million or something like that, It was definitely under $1 billion, and up to the last, I think up to, was it March? I think the loan book was just maybe 2.4 billion. That's a rapid period of growth. Because a big part of that was that bond that they did, over $1 billion. And if you look at it now, they have they've set up a lot of different loan packages and partnerships and things like that. And they have also the kind of companies that they're connected with. So remember, they have like Equity, First Rock, and even now Mayberry. I think Mayberry is likely going to be their financial advisor. and Mayberry even has, I think they're probably the third largest shareholder in dollar. So I don't think they're gonna have an issue getting access to capital to continue to grow that loan book. They have given projections for what they want their loan book to be. I think at their AGM a few weeks ago, they said they are trying to have their loan book grow by 3 billion or grow to 3 billion by the end of this year. So if you look at it right now being about 2.4 billion going to that 3 billion, I would still even think is possibly conservative. And then they have a lot of, they've spoken about a lot of new loans that they're working on. They're engaged in a lot of investment bankers. So I don't think they're going to have access to capital. They're going to have an issue accessing capital. And I don't think, like if you look at, like for example, the Jamaican economy, as much as, yeah, we were talking about earlier, stocks and whatever are down, a lot of the, what would you say, indicators and things like that in regards to our economy are actually doing pretty well. So, lots of people are very active right now. Had a lot of, I guess we're experiencing like cabin fever. People are going out a lot, partying, events, lots of things. The economy is actually, in my view, doing pretty well. So, and a lot of businesses, like if you look at it, people now have, I think, money to spend. They want to spend. They've been locked up. They've been spending. Businesses can capitalize on that, and then dollar can lend to those businesses. So, and then also look at it too, they are expanding into other countries. There's a recent notice that came out. Is it Barbados or Bahamas and some
Saint
other,
Lucia as
St.
well.
Lucia, yeah, St. Lucia too. So they have access to capital. They have, I think, opportunities to unlend that money. And I think they have really cracked the code. If you look at it, their non-performing loans are still quite low. And if you just look at it, like when they listed, I think they were, if you compare them to, for example, other microfinance companies, the big dog, well, it's a big dog. The largest loan book would be Access. And then you had, I think, Last F. But if you look at it now, Dollar has actually surpassed Lasco Financial in terms of the size of their loan book. Lasco Financial's loan book has actually been shrinking, while Dollar's loan book has actually been growing rapidly. And if you look at it too, even though Dollar's loan book is, basically half the size of Access's loan book, Dollar is actually quite profitable in relation to Access. I think there's variability in the profitability, but in my view, Dollar is likely going to be, if you don't consider them already, the most profitable microfinance company listed. And I even saw a recent article that spoke about the size of the microfinance industry, right? I think they're estimating it at $40 billion Jamaican. And if I'm saying dollar has, say, 2.4 billion, and then you can look at some of the other listed companies too. And if you add up all the listed companies, I think it's just under maybe 10 billion. That loan market is huge. Like there's a lot of opportunity for dollar, especially when they start to look towards acquisitions. Because if some of those companies that do not get a microcredit license from the Bank of Jamaica, they can't continue to make new loans and stuff like that. That can put pressure on them, and then dollar can actually possibly buy those loan books at possibly a big discount. And then once again, look back that to the access to capital. They have partners like First Rock, Mayberry, Dequity, like they have that access to capital. So I think dollar is a pretty strong company. The stock price has actually been dropping too. So if you look at that too, the PE, it's looking more and more attractive. They've been posting earnings. In my view, the next few earnings are likely to continue to double in relation to last year. I think the Q1 report that just came out not too long ago, profits more than doubled. It was like over almost like 120 million. And if you look at it, we're just finishing up their Q2, their Q2, which will be end in June. I think last year was maybe 50 or 60 million. So they're likely to double that again.
That earnings call should be coming up soon.
Yep. Okay. See, I'm looking forward
All
to
right.
that. So, yeah.
Yeah. So all right, cool. So David, Chike, 1 minute to share your thoughts on dollar.
Yeah, so Preston kind of hits on a lot of strong nails in the sense that they have a strong position and they've actually, maintained a solid business model. So I think what Matthew was trying to explain was that when you compare the actual net profit or even profit before tax of a dollar versus some of the other microcredit firms with their loan book in comparison, dollar has a higher earning capacity with respect to the capital they actually have on hand. And I just come on to the business model. Secured loans, larger towards businesses, and they still have some, exposure to individuals, but most of their loan book isn't exposed to individuals who are feeling the real crunch right now with inflation and other events. So it's pretty good to see, where they're going and how they're going to continue to grow the business because they just also opened another
Yeah.
branch of Ultra in Montego Bay. So they are
Yeah.
tackling two ends of the spectrum, the small businesses and quote unquote low, or I should say small individuals on one side of the spectrum and the ultra high net worth persons on the other end of the spectrum. So they're doing pretty good.
Yeah. So two things I'm looking for with them. So I kind of know the company well because we work so closely with them. So I have to really measure what I say very carefully. But two things I'm looking for, and I mean, I would say as they grow, and they're definitely positioned to grow quite fast, quite well. I would just say the risk that is introduced by the type of business will continue to grow the more they grow. Hopefully that makes sense. So I'm looking at that. I think it's been pretty, spectacular. The non-performing loans. I want to see if that number can remain where it's at as they grow, only because of I know how aggressive they are at attempting to grow, right? So in inherently you're lending money, you're taking on risk with every single transaction, right? Your business is built around risk. So that's what I'm looking for. And the next piece is actually as they build out the team, how are they managing expenses, right? Because at some point you figure that as you start to compensate people a certain way, the industry gets competitive. We saw where there was somebody with another firm that went to dollar that didn't necessarily work out, but the space can be such that you may have to increasingly pay persons well to retain them. That may be a challenge. So just those two things I'm looking at for them. The non-performing loans, watching how that grows, and the managing of expenses as they grow. But yeah, a company I like is just those things that would be things to keep an eye on as they grow.
Something I forgot to mention, and Matthew highlighted it, was that they said at the AGM they want to earn $900 million in revenue or income this year and about $300 million in net profit. So basically, a 33% net profit margin.
Yeah. Chika, any thoughts on dollar before we move to your pick? All right, Chike, one sec, we're not hearing you. Check your microphone.
I myself on mute.
Yeah, hearing you now.
Hello?
Hmm.
You guys hear me now?
Yeah, go ahead.
Yeah.
Yeah,
I
man.
was saying that no comment right now on it because I've not actually been following that much well. But when I was, the same thing I would say that you stated. It's a financial. It's a microfinance or financing company in terms of loans. That loan book is the biggest factor for me if I was looking at it as an investor. You want either to see it being in terms of non-performing loans as well too. You want to make sure or see that figure either stays steady or is decreasing. And in this market, in the current market of itself. You know, I think when David came on, he was talking about performances with respect to persons, things have increased for persons, mortgage rates going up, etc., and so forth. It's going to be very easy in truth for a company like Dollar to obtain if their terms and conditions are more favorable than other financial institutions. Everybody knows that it's you have kind of a bunch of hoops to jump through to get a loan from a financial institution, and it's from the banks. Let's go with the banks specifically, right? So it would be it more than likely is much easier to get it from the other financial. The thing of Easy Cash though is that Easy Cash needs to be managed in terms of that. And as much as it's a growing company, I understand this. I I did have reservations when they said they were coming back to market for more money, right? Because I was like, all right, you're coming back for more money. How is the current money working? Because that means you've already exhausted all of the current money, or at least most of it. You know, I
That's actually a
want
good
to.
thing, though, TK.
Yeah, I
The
understand. I
more you
understand what
lend, the
you're saying.
more you get in interest
I
income.
understand what you're saying. It's a good thing with context. Again, the economic cycle that we're in is why the non-performing loan book figure is so important right now. You see, if the economy was great, so let's think about it. If the economy was great and interest rates were low, you'd have
So, so let's say that Chike, think we lost you. But what I was gonna say is,
way more
what if?
loans.
Sorry, Chike, go ahead. Go
Yeah, I
ahead.
think I'm back. Yeah, I was saying just the last part. As long as they're performing in terms of management of their loan book, there's no problem for me, right? That's the main thing.
Yeah. What was
Growth
their
is good.
last? Oh, what was their last NPL number?
Matthew,
9.7%. Yeah, 9.7%. So just under double digits. I think the industry standard is what? What's the industry average?
No, so the thing is, remember, there's no defined data. Remember, the sector is
Mhm.
actually being defined now. When it comes on to commercial banks, though, it's like probably below 4% for commercial banks.
Well, yeah, because we know that banks will typically ask for more. It's harder to get a loan from the bank, which means the process is probably different, and the type of loans Dollar would do. So remember, I think the segment is different from the typical commercial bank client, right?
The typical commercial bank client can afford to get a loan. The clients that Dollar gets are ones who can't afford to get a loan because Dollar, remember, Kadeen has spoken about agriculture loans and other creative, loans for entrepreneurs, for example. So, there is opportunities that they're seizing by actually going towards these persons that the banks are not taking on. But as Chika highlighted, it all introduces some level of risk which has to be managed.
Okay. Okay. All right. So we'll leave it there for now for Dollar. Chike Europe. What stock are you watching, sir?
let me. I might be having some little bit of issues, but the stock I'm watching is Indies.
Man, I knew you were gonna say that. All right. Tell us why.
Yeah, you would know I'm gonna say that because they're 6 months in terms
All right, Chike, we lost you again.
of things have actually take on audit that was put out. Am I back yet?
Yeah, man. Yeah, man. Yeah, man. You're
I
back
think
now. You're back now.
I might have to shift my phone, but
All right. I'll have everybody else chime in on their thoughts for indies, and
they've been some depression.
Chika is just jumping in and out. He probably needs
yeah, man.
to join back in.
Yeah. So guys, chime in on Indies while I ask Chike to reconnect. All right.
So my comment, I saw where the company mentioned that their well, the earnings came out just this week actually, and we saw where Indies mentioned that the performance was relatively down year over year, and that was based on them increasing the samples given out, and they had that gap in terms of what they could supply the market with versus the reporting period. So that gap, contributed to they're not recognizing revenue in the reporting period, which they then mentioned that they benefited from as a result. But I think what Chike is specifically considering on a higher level is that in this pharma is making headwinds with its new development on drugs.
Yeah.
So the post released to the JSC about the original patent holders and the product they're developing not objecting, and they're just waiting on the FDA to get the whole green light to bring some of these products to market. And that's just a significant benefit in this because this will be an entire new market that they can carve out for themselves, not just in Jamaica, but in other markets, especially because they have the FDA stamp of approval.
Okay.
So that's one project. Then there's also the new property that they're developing in Montego Bay, which is going to also be a BPO center as well. And they just have a decent runway. They're relatively smaller compared to medical disposable and supplies limited.
Yeah.
However, their balance is a lot more strictly managed, and from a cost perspective, they're in a stronger position. So whereas in the case of MDS, they have a lot more debt on their books and a lot more constrained on their end. In this is a better cash, has consistent operating cash flow generation, ease of access to debt, and is going into the route of being a supplier, not just being a distributor. So,
Okay.
that kind of, I believe it's vertical integration in this in a system because they distribute medical supplies to different pharmacies across the island, and they have their own pharmacy as well. So by creating a drug and being a supplier now and not having to actually take on any of that physical setup to develop these drugs, they basically created a new income stream that took research and time, but it's still works in their favor for the long-term growth of the business.
Okay. Chike is back. Chike, I don't know if you're able to hear what we were saying, but
No, I missed everything.
okay.
But I
Well,
think
so finish telling us why they're
well, you
why
have the
they're
right thing up.
yeah.
You have the right thing up, and I want to make an assumption that David was going through some of the changes that has happened. So yes, this is the main thing. Last stocks to watch hasn't changed. I was always looking very much to this patent in terms of its closure, coming to a closure where it has been granted, and it seems that we're coming closer and closer to a close in terms of what it is. So I mean, this is significant for them to be able to have this up there. But more importantly, we're in a situation where health is actually a more critical viewpoint of persons now, especially with the tightening of money. Michael Leachin spoke about it as well too in terms of what he's looking on going forward based on the current population age demographic of itself and
Yeah.
so forth. So I mean, I've always hung my hat on indies, fair disclosure. I've said it before, saying it again, fair disclosure in terms of the company. Um, they have been, and it's a quarter. I've said it before. I don't really like looking on quarters. Give me the company's trajectory going year on year, how much it is. So this quarter, the quarter that you had up that was just released on the 12th of June, there's been a bit of decrease with respect to revenue. Well, it doesn't show here, but when you go on the actual financials of itself, you're gonna see it. Uh, Not revenue, sorry, net income, right? There has been a significant increase in net profit before and after of itself. And that's basically because the administrative expenses kind of started, not kind of, it did jump up for them. So if you scroll up a little bit, you'll see it in terms of the increase in their admin expenses. Stop right there. You're gonna see it. You're gonna see that that admin expense line has jumped significantly from last year to this year. And the funniest thing is that they made a higher total amount of revenue, or total amount of gross profit, when you add everything together, of at least what, that's at least 70 million extra, no, just under 70 million extra in there. But still, admin expenses jumped up. Admin expenses is something I'm keen to watch in companies in general, because that's really where it can eat into your bottom line in terms of the company's performance. So as such, admin expenses jumped up, profit from the operations decreases. It's just a given. And then also their finance costs also have increased in terms of them paying the loan interest. But a positive to that is that by paying more to their loans, that means that come the next cycle around, they'll have less to pay on those loans unless they take out new loans at another rate that is either favorable or unfavorable. You know, if they don't take out any extra loans, then they have less to pay on those loans. So you've seen a decrease in the total net profit, or net income, as I'd like to say. And then you've also seen decrease as well too in their cash flow based on where it was. And now I look on, you scroll down a little bit, Jeremy, you go to the cash flow from their operations. That's a key point for me. Doing, they are having manufacturing and so forth going on for their products. So their net cash from their operations has seen a little bit of a decrease. Go down a bit, just a little bit. There we go. So from the year before, from the period before to the period now, that's kind of a significant decrease. But then as you examine it some more, certain things have jumped up for them, and they need to get that, I mean, under control a bit in terms of their receivables. Haven't really had some payments. You see that $19 million there. Um, we'd like to see that being paid off. Their payables, they're paying more. Their trade payables is 11, from 2 million to 11 million in the period, in the difference between the period, you know. So, and also you have the director's account as well too, that increased a bit. But then they've also kept on their nice stead of their cash flow from investing. They're still doing their intangible assets. Well, they've actually had a significant increase in intangible assets, and also their their cash flow from financing of itself going down. And at the end of all of that, still have positive cash flow pretty much. So they've paid a little bit more interest. Um, they have paid back on some loans, on their loans, and their lease liabilities. Well, that figure is there a little bit. It's actually decreasing because it's from 88 to 82. And of course, with that, they still have at the end of the period that their cash flow is still 260 plus $1 million, is pretty good in my opinion for this company being capitalized. So I mean, they added it, not is marginally, really minuscule, $1 million, 1 million odd dollars. But overall, what I look at is I'm still pleased with their cash flow in terms of them having good capitalization there. And is healthcare, or should I say healthcare products, you know. So in the current cycle that we're in, more persons going to seeking medical care and so forth, the specific type of drugs that they offer. I am not going to make this statement that Jeremy knows well about, that we did in another group, but I'm just gonna say this. Um, we have all manner of health initiatives. There's the initiative on cigarettes. There's the initiative on sugars and so forth. Well, based on events, I immediately went and just looked up a set listing of drugs that
Are you talking about a
don't do it,
recent?
Jeremy. Just don't do it, Jeremy. Just put it off the air. I don't want
Okay,
to be called
okay,
on
fair, fair.
anything, but
Okay.
I went
Fair enough,
and
fair enough, fair enough.
I just confirmed a nice set listing of drugs that Indies has to offer, and I made no bones when I said I'm good. I'm making my play that I am comfortable that in if this situation that I have observed continues to happen in a few years, they're gonna be in high demand for particular set of
What-
drugs.
So on that point, what you're saying is that you're favoring companies not just indies but Elite, Image Plus. Who else is there? MDS. Because I mean, so the nature of lifestyle, how people live,
Exactly.
how they do certain things, it lends
Krispy Kreme
itself. I
just
mean,
opened
personally,
Germain. That alone tells you,
yeah.
What?
So, so
Krispy
I
Kreme.
was gonna say personally for me, I
Just
had
don't
some,
do it.
I I had a situation where for me in the last probably 3 years, I've had to do a series of scans, and I started to think about, okay, I keep going to this certain place when I'm having to do a scan. I may as well be a shareholder, right? So
Exactly.
I mean, it's just the way of things, right? All right, cool. So allow Matthew if you have anything to add, in this, and then we can move to the next one.
Um,
Let's see what Harold is saying as well. Harold saying receivables is one that have to put under further control to be attractive. You're talking about indies, Harold. They have had decent dividends return as well, which for a junior market stock is better than. So I've always liked indies dividend yield when they've paid it. Well, I consider it reasonable. Again, that word. But yeah, Chike was alluding to the expense management. Well, I guess receivables is different from expenses, but I mean, I get your point. Matthew, go ahead.
yeah. So I was actually looking at indies a bit about that same drug approval process. I knew that they were trying to get two of the generic drugs approved. But what I wanted to know at the time was what were the medications actually. So I actually like that they are now telling you which one of the medications was, and I was just doing some research on it. So
And
it's
you're a doctor, so you can shed some light on it.
Exactly.
so it ties into your point. So what I'm seeing, the let me pronounce it, reg adenoson, basically what they use it for. Sometimes you can have um like if someone has a heart attack, right?
Yeah.
For you to get to a heart attack, what is happening is the the blood vessel that goes to your heart, or one of the blood vessels that goes to your heart, gets blocked. But that doesn't just happen usually quickly, it happens over time progressively, and you get like fat basically building up. So we try to prevent a full-on heart attack, but you can have problems or chest pain and things like that before you get onto the full heart attack. Some of the tests that we can do to help to find out someone who is at risk for getting a full-on heart attack, what we try to do sometimes is we can do things like an ECG where you put the stickers on your chest and we look at how the heart is, the electrical activity of the heart and stuff like that. But sometimes what happens is that some people, when they're just sitting, like say you do the test, the ECG, when they're sitting down, you don't see any issues. It's when you actually exercise and you actually increase the demand or you make the heart start to work a lot that you start to see those changes. Some people actually can't exercise to the point that you need to trigger those changes, and you can actually give medications that trigger those changes. So that is one of the medications that they apparently got the patent for, or to make and sell in the US. So what it does is actually speeds up your heart rate and it tries to simulate someone actually exercising. So, and when I'm looking it up,
Interesting. So
it
that's
is,
a great opportunity for them then.
yeah. So it's the agent that they're going to make. It is the preferred agent for that type of test.
Okay.
So, and then if you tied it in, look at something like America. You guys are talking about Jamaica and our population stuff. But remember, Americans high percentage of them are obese, they have diabetes, hypertension, which are all risk factors for having heart disease. And so a lot more and more and more people are likely to need these tests to help them prevent a heart attack. So that actually could be something very interesting, very, very interesting for indies. I'm also interested to see what that other medication was. Is it something tying into, is it also something related to the heart, or, I'm not sure, but I think that could
Matthew,
actually be pretty big for them.
I recommend you become an accredited investor because they kind of mention some of this in their private placement document. And this is why we need better standards in Jamaica.
Oh,
Or you
okay.
said I mentioned this before this official notice came out.
So they never name the drugs, but they give indicate some explanations in their private placement documentation when they were issuing the $800 million bond.
Okay.
Okay.
So David, you must share those details with us, and that's
I
so
do
I'll
have
have you
it.
in our community group.
I do have it, Jeremy. I said it back a couple years ago, and that's why I saying that if you are accredited investor, it's sometimes a bit information about a company, and you do when you get in the JSC, my annual report perspective, or even a quarterly report perspective. There's a lot of information
Well,
about in pair replacements that you should know, but anything goes.
Yeah.
I'd like to add, even though I'm not an accredited investor, um, I just went and dug them up. I mean, in terms of when they said what drug it was, USDA is there that if you actually start poking around, you'll find out what is there and to be approved according or in the process of being reviewed for approval. So I actually did find them out before they got to this in a way. Maybe it wasn't like the full description that they gave of itself, but it was there. Took a little bit of researching though. But again, that's what you're supposed to do if you like the company that you're invested in. You're supposed to know what they do.
Yeah.
First the thumb, know how the company you're invested in earns $1.
So wait, what's
Yeah.
the other drug then, or what's the other drug related
I
to?
can't remember. Honestly, I cannot remember.
Oh,
No,
you
because
When
can
you
PM
do
me
when you do
after?
share it in the group. Yeah,
Yeah,
yeah.
man, you
Because
can
I
PM me
mean,
after.
Matthew is
yeah.
our consultant for all stocks medical. I can actually just continue on with mine, because mine is actually Image Plus, right?
Sure.
Because I think that Image Plus is definitely not being taken seriously. Actually, it was a tie between Image Plus and One, because I thought, well, I think there's probably even I think there's an equal case for both in that. So first, I do think, and I'm kind of cheating here, but I think One's next set of results should be good, based on just some of the things that they would have mentioned that are coming up. I'm actually a part of a training program right now that they're using one-on-one as their platform, right? I'm a part of, well, I won't share it here, but it's something that I'm just seeing where those areas that they spoke about in terms of their prospectus that they want to build out, etc. Those things maybe are coming on stream now, whereas they would have mentioned at the end of the year that they weren't able to get to the milestones that they had projected. Things are getting to where it should be. And then for Image Plus, I mean, we talk about them in the group almost every day. I think that company is just really, really not getting the love that it should. So let me be clear though, because I know we're supposed to say what we're watching and why. So I'll confirm the company that I'm interested in looking at here is Image Plus. I think that they just had their really their best quarter, their best year ever. I think that will continue to improve. Same thing that we've been talking about before: lifestyle, number of scans that persons will have to do as they age, aging population, etc. I think that they would have been looking at the new modalities as well. We saw the the announcement about them now acquiring the location, which is of course going to cost them some money to develop, but then you're expecting that once that is completed and things are underway, then you should see, you know, overall growth similar to what we're all waiting for in terms of Fontana. So I'm waiting for the next earnings call to hear, you know, some timelines for the completion of this new location, etc. But I think Image Plus is just well positioned, definitely in comparison to its competitor on the market. So yeah. Any thoughts on Image Plus, guys?
Well, they have a major advantage with the CEO in the sense that because she's not from what you would call the traditional medical background and comes from the finance background, she has a little bit more strategic insight in running a business, and at the same time understands the constraints that, you know, less modalities and also operational uptime impact the ability for services to be offered. So, you know, otherwise speaking, I can agree with your perspective. And, you know, they just bought that plot of land to develop a new space and, you know, offer additional services. And
Yeah.
realistically speaking, a 3% dividend yield on, you know, a $2 stock isn't a bad thing because we're 6 cents over $2. So let's just see what happens when the company, you know, potentially considers paying another dividend later this year. Because if it's another 6 cent dividend, then that would basically be a 6% dividend yield stock, you know, just barely after listing. It would be similar
So
to the mail pack days.
yeah, I think that this is definitely one of those companies that I do take into context our current climate. I think this is one of those companies that has the potential to do well now, but should everything be back in terms of, you know, lower interest rates, etc., this is one of those companies where, to me, if you have an extremely favorable, or let's say a bull market, I think this company would even be like one of those that could have the legs to do really well, if that makes sense. So Chike, Matthew, any comments on Image Plus?
Matthew, go first. I'll go last. I'm short with my own, so. Yeah. Matthew, on mute.
I like that they're outlining, or they're actually keeping up with a lot of the plans that they outlined in their prospectus, because
Very
in the
important.
prospectus they had
Exactly.
in the in the prospectus they had said that they wanted to upgrade their main location because they're saying that they wanted to introduce those new imaging modalities and whatever. I think that's spoken about mammograms and stuff like that.
Yeah.
And they want to go into a lot of interventional radiology and stuff like that. But they're saying that the space that they currently have basically can't accommodate that.
Yeah.
So I think that is pretty nice. They're lining up for that. I guess that will take some time though. Because I think they said they expect to finish acquiring it. Was it end of this
Let
quarter?
me find it here.
I think it's end of this quarter, and then they're gonna have, but that's probably gonna take at least a year or so to build. I don't know.
Yeah. Yeah. Yeah.
And I think they even spoke about acquisitions of other imaging companies too, which I wouldn't be surprised if they can do some of that. So I think that it is over like the next 5-10 years, they're the big dog in the imaging space. They're likely to acquire other smaller players. They're likely to continue to build out their
they're
branch
already
networks.
the big dog in the space, though, Matthew.
Yeah, I'm saying they are the big dog in the space, so they're likely going to continue to acquire other. They're gonna likely acquire other smaller ones, like, because I remember what I liked in the prospectus, they did like market research and they showed you how many other companies there are and then how many branches they have, and there's a lot of them that only have maybe 1 or 2 branches. So I think they're likely to continue to expand their network, continue to expand the services that they offer. I think also something that I think will be interesting is if they can get. I don't know what kind of financing they're doing for some of these scans and stuff like that, but I think it'd be good
That's
to
what I
get a
was
good
thinking of. Yeah.
financing partner to be able to, because a lot of these
Yeah. You're recommending dollar to them?
well, we'll see, we'll see. But a lot of these, you're mentioning a lot of the scans, for example. So something like a
Yeah.
mammogram, that's not something you're just gonna do once. You ideally should be doing that,
Yeah.
frequently and stuff like that every 2 years or so.
Yeah.
Um, so yeah, I think it's a interesting company. I can see a lot of ways that they could do very well over the next few years. Don't think we're gonna see much movement necessarily right now, but
Yeah.
we'll see.
It's
I
it's
think
it's
the
one of
last report
those.
was pretty good, right?
Yeah, they're their best quarter, best year. I think they're surpassed the billion in revenues. I think it's one of those companies that I mean, I look at it almost similar to how I saw Trans Jamaica a while back, where it's almost like the business model is so simple, the way they make money is so simple, very profitable. It almost feels like um this case where some investors like a company with like a really good narrative or a good story, but Image Plus, Trans Jamaica, those companies just kind of seem so very straightforward, very simple way of making money, very profitable, that maybe people don't give it the same consideration. But to me, it's one of those companies, again, if you'd ask, will it be around 10 years, 20 years, 30 years from now, the answer is likely going to be yes. So that's kind of what I'm seeing there. All right, who haven't we heard from yet? David, right?
Yeah, guys. So
Just don't say Bunny, David.
I'm not the devil. I'm not the devil. I'm not the devil, but uh I was gonna say GK. So
Interesting.
no, we have to be realistic. Like GK is, one of those companies that it just takes it time to grow, but they're growing. GK is not joking about their intentions. They just acquired another Scotia business, in part of the Caribbean, and they also, have more than 10 plus. I think it was, I don't remember how many targets they're looking at. Like Donerby didn't, I can't remember what Donerby said from the AGM, but there were a number of targets they're looking at locally and internationally. And the plan to actually cross list or I should say list their financial and food subsidiary food segments, that would be an entirely different game changer. So persons can remember Jamaican Teas and QWI. Jamaican Teas developed a investment portfolio between KIW and Jamaican Teas, and they eventually had spent up as a company on the JSE, which allowed QWI to basically double its investment book. While the pandemic could have basically suppressed, some of that earning potential for QWI, it still got guaranteed the ability to grow the book of that business while still being able to consolidate the business as well. And it'd be amazing if, GK would be able to actually access financing or capital from one of those North American businesses, not business markets, like probably NASDAQ or NYSE, and if they retain control, 50% or this board control, that would be just as great, because you're talking about having access to billions upon billions of dollars, create an entire different scale business, and grow yourself through a mixture of acquisitions and these new product innovations. And we shouldn't forget right now that GK is making most of its money from Jamaica, about 55%, and they want to grow at 70% of income coming outside of Jamaica at 2030. And they're also considering the plan to list the financial business, because like GK's PE, at the end of last year was about 10 times, or 10 between 10 and 12 times, earnings. And GK's PE ratios technically over the last 5 years, from what I did my analysis on, has tended to be below 13 times. So even though GK is constantly growing its earnings, its actual uh, you know, price to earnings ratio isn't catching up. So if there's actually significant unlock that value in the coming years through, these listings, acquisitions, and just growth on that old basis, it's an entirely different basis altogether. And Darnaby is pretty adamant about getting that done, and he's pretty significantly focused on the food business. Like he's saying, the ethnic foods, has a strong interest, in the North American markets, and the European investment bankers and the ESG focus and so forth. And today GK touched $70, and the buy queue is pretty decimated. But one thing we should also remember is that if GK gets the green light, JMB has been in this situation for a year plus now, but actually gets the green light from the TTSEC, they'll be able to buy back some of their shares. And GK has done a share buyback in the past, like 2 times before. The last one they done is between 2013 and 2014. So I'd like to buy back in this current depressed climate with these depressed prices, and that's additional shareholder value overall. And we should remember that GK staff got about him till last year to become shareholders. So there's just a lot of value that can be extracted later on for the different businesses, because they have a large general insurer here in Jamaica. They have a strong money services network here that is next to impossible to disrupt between Bill Express and Western Union. And while their financial businesses are what you'd call micro in the concept of, locally here in Jamaica, they're looking to get a general insurance license in Guyana and just expand outside of Jamaica to those other markets. So while Jamaica is currently the bedrock of GK, it's probably going to just be that original founding stone for them later on. So that's where I can looking at them, because GK, from a dividend perspective, that boat hasn't necessarily gone, but I'm not ready for retirement as yet. But they're on a pretty strong and sustainable path.
Yeah, I get you. All right, cool. I mean, GK, it's a company that I've always thought the nominal price has been a blocker for some investors. I guess my challenge when I just started investing, I actually had it in my portfolio, but I was lamenting the fact that I couldn't own the number of volume that I wanted to hold at the time that my cash was limited. But I mean, there's a lot to like about the company in terms of just structure, model, footprint, etc. I think this is just one of those companies where I'm not sure that um, the market appreciates it in the way that it should. And of course, for me to make a profit on my investment, others have to be willing to pay a higher price than I'm purchasing for me to be able to make a profit. Right? Sounds simple enough, but that's what it is. So
No, you're not wrong. You're not wrong at all, Jermaine, because when I started investing in 2016, GK had just committed a stock split. So,
yeah,
GK was trading at $124 per share. And before, 2019 end, you had to buy at least 100 units of any stock or sell 100 units of any stock. So if you want to buy this, the minimum of GK, had spent at least $12,400.
yeah,
And back then, 12 grand actually had value. So when they had that
yeah,
3-to-1 stock split and went $40, at the end of by 2021 or early 2022, well, basically 2021, they hit back over $100 in less
yeah.
than 5 years. And as
Actually,
you said,
I actually thought they were going to do a stock split again. Um, but I mean, I don't know what goes into that decision for a company like this, because I mean, it does. We've seen days where it does like 4 million units, etc. But then there are other days the volume. Well, I guess the volume better than most. Um,
The company is
Won't call the
performing.
name of the company I thought of.
The
Yeah.
company is performing. I mean, at the end of the day, let me say it this way: how I look on it, it's easy. It's easier for a company to move from $1 to two, and that's 100%, than a company to move from 70 to 140. Right? So they'd have to have really significant reason why that has happened. So, but I mean,
Yeah.
GK is a solid company, solid performance, solid where they are in terms of what they do, how they make their money, different business lines, etc. So, I mean, between them and the not liked GMMB, the two that just doesn't work. I mean, my Dave touches on a very important point. The best thing you could do as an investor is have patience. At the end of the day, you buy the company, sell all of it. That's the thing. Again, the company is a good company. Don't sell all of it. Keep some units back and learn to and just basically build on other things, or from time to time build on that as well too. It has set some of the wealthiest, most silent people in this country up very nicely in terms of how they have built their wealth off of equity, right?
Yeah.
Ask
Yeah.
anybody, ask
I
anybody
met
who
a
is
guy. I met a guy at the JSC conference said that he's been investing from like the 70s,
yeah.
and I mean
You,
that's
do you
crazy.
remember when you and I went to pre-COVID Jesse's forum that
Yeah.
year, and we met that gentleman that basically has had his entire retirement, put his kids through college and everything else, and all of that was off of NCB, right?
Yeah.
And he broke that table. I think I still have that picture. It is what it is. You buy really good companies, you add to them, you will at some point in time end up with huge capital appreciation. The thing is, it's about learning. That's what investing is. Investing is a learning journey. So, and patience. But different strokes for everybody else, for different folks. Some want to trade, some want to. So everybody has their
Actually,
own objective.
so Chike, I wanted us to do, because I don't think we have enough time to go around the table again. So I'll just ask everyone to leave an investment tactic or strategy that they use. Now, we don't call any specific company names or anything, but if you can share something that can help our audience become a better investor, I think that'd be helpful. And guys in the chat, let me know if you have any questions for anybody on the panel, because we're gonna wrap up in about 12 minutes. So I'll start with you, Matthew. Any strategy or tactic that you can share that can help our community?
Um, so what I try to do, I try to have somewhere that I record information. So maybe for some people that's writing stuff down. In my view, I think, the age we're living in, I definitely think it should be some sort of computer system. So whether that's OneNote, Notion, Evernote, Word docs, whatever, I'd suggest trying to record the information down that you do your research on. So, because remember that with this research that we're doing, it's not like you just spend 10 minutes, sit down, do your research, or even an hour or 2 hours, sit down one time, and then that's just it. Okay, I've done all the research I need. I don't have to do anything else. One of the most important things I think is to be consistent. So it doesn't have to be you sit down one time, 5 hours, 6 hours doing a deep dive on a company. What people don't realize is that you can split it up and you can just add up time. So it could be you spend 10 minutes a day, 15 minutes a day. And when you record the information, it makes it easier that when you need to reference it. Because think about it. Say at one point you do research on one of the companies we spoke about, say Dollar. You sit down, you do your research on Dollar, you look up articles, you find information, things like that. And say you make an investment in Dollar, you make your gains, you reach your goal, you sell, you're like, okay, I'm good. and then you go to look towards another company. 2 years, 6 months, what if there's another investment opportunity that you possibly see in dollar? If you don't record the information, you then have to possibly start from scratch, where if you had recorded information, you could have just edited, maybe, so say some of the information might be old, you can edit it, update it, and whatever. It makes your life a lot easier. And you'd find that if you get into this practice, imagine doing this for the same people you're talking about, they're doing it for 10 years, 50 years. They might have their book, but you don't realize the power that we have now, because we have the information. We're in the information age, the internet. You can have all. Imagine having all of that information over time recorded in a central area that you can easily reference, search, make notes on, all that stuff. Like, that's very powerful. So I think use some of the tools that we have at our disposal right now, because remember that we're all in a market where you're trying to be ahead of people. You're trying to know more information than them, and then also apply that information. So having tools, systems in place, things like that, can really help you to actually get an edge. So because you realize that as much as you can remember things, or memory as people, it's not perfect. We'll always forget stuff. But when you have things that you can record it down, it just, in my view, just makes it a lot easier. So that's something I try to do.
Okay, cool. David,
Uh,
Chike, you wanna go next?
so I'll just get 2 quick points because they're pretty important. Understand basic accounting. It will come in handy. The same reason why we always say, wait, how come the revenue or profit gone up for the quarter? Is the same way you can understand, when a company's earnings might significantly increase after a particular transaction. So, for example, although the JP Panjam deal was finalized and everything on March 31, the shares are not registered and converted to stock units on that same day. That came like a week or 2 weeks after. And the same is why stock prices run up at the end of a quarter or a month. That comes back down to accounting, and I'm going to explain a little bit more and explain further on that. And, good point to Preston about writing down things and keeping notes. Like, I will use Twitter as my public Bible on certain things, and then I'll have a Word doc, where I save certain things that I want to just write down to just, express my mind. The second point I would add, is don't be afraid to try something new and just fail and learn from it. Like, I made some losses last year on, option plays, and I made it back this year, and even today, like, I woke up this morning my portfolio was up considerably, and I just sold and I went back to bed. And you just that kind of learn, make mistakes, learn, and don't do them again. So that's really a pretty important point, because sometimes we say this play don't make no sense, it don't work out, and somebody else applies it and it works out for them. And that's always about being right. Sometimes it's just about learning from learning something, getting the experience, and just coming back again and applying it in a better principle. Because some persons would say, hey, I can't make money or whatever, but sometimes you have to understand that each market and each environment will have different scenarios and different conditions. So while some persons are not making money in this depressed market, as we'd like to describe it, the opportunities are always there, but sometimes you have to just take a chance and just try something new, and talk to others and just bounce ideas off of them.
Yeah. I'll just say though, I think the way money is being made is different. I wouldn't say money is not being made. And I think it just takes a little bit more effort, where persons maybe could have just not done proper research, not done their due diligence and made money. Now it's a little bit harder. And it actually, to me, is building up your skill set as an investor, right? But yeah, thanks for those, David. Chike, ready to go?
Yeah, I'm gonna piggyback off of what David just said, and basically say that both David and Matthew. I always say do your homework, but actually I'm gonna put something else as well too that I've very It's not recently, but it's, I would say, in the past 2 years. No, don't be rigid in your process. You must have a process. You must have a convicted process that you're doing, but be open to changes based on information and so forth. If you are rigid in your process, that means you're falling into the trap of you are the only one that's right in the room. And if you're the only one that's right in the room, you're more than likely wrong. So don't be afraid to, with new information coming on stream, don't be afraid to change. So what David said about you're not really failing, you're learning, right?
Learn,
Money
grow,
is a
invest.
tool, right? So money is a tool. That's what it's used for something. We don't just suck it away and admire it on a wall like a painting, right? So don't be afraid to try a strategy that might not have fit into your original viewpoint or so forth, and always put up only backing, financial backing, when you expose yourself to a strategy that you deem risky, what you are willing to lose to test your theory. I believe, and Jeremy knows this, well, Matthew knows this, and David knows. I believe heavily in testing. If you have a theory, testing it. There is nothing that's going to teach you with respect to investing, testing a theory, like having actual skin in the game. So that's actual money in the game. A lot of platforms give you access to pay to do paper trading in terms of is virtual money. It's a good feeling, yes. But you see, when it becomes your actual real money that you're putting behind it, you pay keen attention. You pay more keen attention. You record information, like Matthew says. You use different ways of technology to do certain things. And at the end of the day, it is basically about not being rigid in your strategy. It's about learning what works, adapting and changing, so and seeing what works best for you. For me, I'm a long-term investor, so for me, my I always say I buy everything from what I believe is some type of margin of safety. Regardless of how risky it is, there is still a margin of safety I apply. And if there is extreme risk and I can't fundamentally value it, and it's just technical valuation behind it or technical analysis behind it, then my margin of safety is point blank how much money I'm willing to lose. Because if I put that money up and the thing has nothing else other than technicals behind it, I could lose all my money. So you only put up what you're willing to lose. You don't be rigid about your and funny coming from me, huh? But you don't be rigid about your process of itself, because it's a dynamic market. The things change over time. So always be open to adapting to change and take in new information and mold it into your process, right? Accordingly.
Yeah. All right. Thanks, guys. I mean, what I'll say is take advantage of the opportunities now, right? So the strategy or tactic that I'd share is that, sorry, one of the things that we used to hear a lot before we got to this point in the market is that persons would say, for example, I wish I had bought more. I know me personally, one of the things I've always wanted to do is own really large volumes in really good companies. And what I've been finding is that you pretty much have the opportunity now, but you have to overcome the mental hurdle that you're buying and the price keeps going down. Right. So I would say that, again, we pointed it out at the start of this episode. You're investing in the future of the company, not its current state. So if you buy now and you're watching the price tomorrow and you're watching the price the day after, you're not likely going to stay long in that investment. It means to me it's a short-term investment for you, which there's nothing wrong with. But to me, you can't, the average person, let me say it this way, the average person can't build wealth focusing on the short term. And what I mean by that is, I think you can grow your capital by making short-term trades, short-term gains on the market, sure, but the type of wealth that you may want to know benefit from compounding or like exponential growth, that's going to be from companies that you pretty much just buy and hold, right? And so there's nothing wrong, and I hope you guys understand the difference in what I'm saying, where at some point you're building wealth or you want to try to build wealth passively, not knocking anything short term. That's not what I'm saying, because I invest short term and I invest long term. But the investments that I'm holding the most weight on are the ones that, like, for example, I shared with you guys that I made a private equity investment. I can't watch that price. There's no price for the company right now. But I made an investment in it. I follow up with the company, try to understand how things are going, but I can't say a stock price because it's private equity. Now, if things go well with that company, that's going to be a really good investment. There's still a point now where it's a risk because there's no certainty. So this period that I'm waiting for things to unfold, I can't, to my portfolio, it just shows the value that I have invested and that's it. But maybe 5 years from now, for example, if that company is able to list, then my wealth can go from zero or go from where it is now to multiples of that, right? So I'm making the point that if you are at a significant loss, if the thesis of the company is still sound, consider purchasing, which will lower your average cost. So if you're down 40, 50, 60% and you purchase now the same amount that you bought previously, you'll cut your deficit in half, right? So if you purchase, you're down 40%, you purchase the same volume, you'll be down 20%, right? So it's that kind of mindset that I want to encourage persons to have, because we are going to come out of this period. We don't know when, right? Could be 12 months, 18 months, 2 years, who knows? We're going to come out of this period, and the persons who are going to be the happiest are those who invested consistently during this period, right? As I said, if you're down in a company and you don't have anything else to do with it, I wouldn't just sell the money and hold the cash, right? Because one, if you're selling at a loss, you'd have realized that loss. And two, now your capital is holding in cash, which is not doing anything for you, right? So that's what I would share. Hopefully that's helpful to somebody. I want to thank everybody for being here and sharing, your feedback. I've asked Adobe Math Lab, I think was his name. He was asking, I told him that the plan was for everybody to give at least 2 from their watch list. So I've tagged you all in the Telegram group, asking you to share your second stock to watch and why, so we can kind of build a discussion around it in the Telegram group. I want to ask everybody, if you stayed with us for this whole time, be sure to like the video. It definitely helps us. I've kind of stopped asking for likes. I don't know why. I feel like if you like the video,
You can
you
just
like
do it.
it just kind of feel weird. Like, share, and subscribe. I kind of feel like we're kind of past that stage. But thanks to the 80 persons who are on with us now. We will have a lot of activity coming up, and I'll say that as a hint that there are some offers coming to market. Can't share the details of them yet, but I've spoken with companies of about 3 offers. Note I said offers, not IPOs. I spoke to a company today that is not an IPO. They're expecting to do a raise, and the timeline that they gave me is a couple of months. So it's something being worked on. And so I just know that there are things that are coming in terms of the market. So we will be doing more videos, more activity will be there. Maybe we'll see more interest. So for the next stock to watch, maybe we'll talk about how the market has maybe changed since this point, right? So look out for those videos. We aren't going to be sending out as much notices either, because we want to actually see how much traffic we're driving to our videos directly from YouTube, nowhere else. So we're not going to be doing as much posts, but just know that we're probably going to go back to our 3 to 5 videos per week, right? Because we have that much content coming up. So just a note for everyone. Thanks, guys. Really appreciate it. I'll see you for the next one. I'll share your details in the description of the video. So thanks a lot, guys.
All right.
Yeah, no problem.
Cool. All right, let me see if there are any comments that I need to address, guys. If you have any questions, let me know. So Eileen saying that I have some stocks that I have owned for 20 years. Well, Eileen, can you tell us what one of those? Tell us at least one company that you've been holding for 20 years. I'm really interested in hearing that. Orville is asking how that's doing now. I'm very, very interested in hearing. Holding for 20 years, hopefully you had good volume. Eileen, I was asking this question, guys. Are you investing at the same frequency and capital as this time last year? I'm really interested to know. For me, I haven't invested the same capital, but I'm still more or less doing the same. So I typically try to do maybe, let's say, 4 to 10 short-term trades for the entire year, where I try to get somewhere between 50 to 100% on a company, well, on my investment, let me say it that way. And I try to do that 4 to 10 times per year, right? And I haven't added any capital to my portfolio since December of last year. So I'm trading with the profits from that, from what I've taken. Of course, there are some companies that I would have taken profit on recently with good reason. Companies that we talk about all the time. Elaine is saying if Image Plus goes back to 1.85, that would be amazing. So guys, I said this all the time. I'm not worrying about, like, I'm never worried about price. Remember, price fluctuates daily. So it could very well go to 185. Will it stay there? That's what you should think about. So I'm just trying to see if there's anything that I missed. So First Rock, Alibaba, I think I reviewed their company. I don't know. Let me get back to you on that one. I don't know. I don't know. Fosrich, what's wrong with Fosrich though, Elaine? I think Fosrich is gonna be just fine. I think Fosrich is gonna be just fine. All right, guys, if I missed any questions, just let me know. But I'm just gonna kind of going through some comments. Marlene says she's stocking up on Image Plus. She feels that they're poised to do very well. Love the CEO as well. Yeah, Keisha is pretty direct and transparent. Orville, any stock picks from the tourism sector? So actually, I like Dolphin Cove. I did their review recently. I think they're actually going to have pretty much a good year, I think, based on where things are for them. Let me see. Okay, so I've gone through some. If there's anything I missed, let me know. Sophia is investing more. That's excellent. That's actually what I recommend. Well, invest consistently. It doesn't necessarily have to be more, but just keep investing. Buying more than last year. That's actually interesting. That's good. Been through every cycle with them with dividends. Okay. Farah King, welcome. So we actually so we focus on local and overseas stocks on our channel. It's mostly local stocks, as in local to the Jamaica Stock Exchange. But in our Telegram group, we speak about the US market. I did a poll recently to find out if persons were interested in crypto. Persons, it wasn't an overwhelming vote or interest in it. So it's not a topic that we cover. We actually tried to do some crypto videos earlier when our channel started. They didn't really get a lot of appreciation. So we just thought that our audience wasn't interested in that. Do I own cryptocurrency? Yes. I think it should be at least maybe, well, not at least, somewhere maybe 3 to 5% of your portfolio, because there's opportunity there. But yeah, so it's not something that we're going to cover predominantly. But if there's interest, then that's something that we'll look at. Oh, yeah, man. Yeah, Fire King, we have our own stock exchange. Sophia, let me share the link for the Telegram group. So yeah, so check out our videos where we talk about how to get started investing, what are the requirements that you'll need, etc. Yeah, so Sophia, I just shared the link to the group. You're welcome to join us. My investment approach remains the same. I like that, Alibaba. So yeah, good to hear. All right. Again, I just want to thank the persons who were here earlier. David Rose, who is a regular on our channel. You can also catch him on most taking stock each week. Chike comes out of retirement to join us for stocks to watch at least once per year. And Matthew, you can find him on his platform Limitless Podcast. I'm actually going to share the link to their channel here. They've been doing good stuff. So check them out, Limitless Podcast. I think the only thing I'll say, and I don't think Matthew is still listening, Matthew, stop splitting up your videos. If you do an interview, share all of it. That's the only feedback I have for Limitless. Fire King currencies is Jamaican dollars, JMD. So depending on where you're from, you can reach out to any one of the 14 brokers, and they'll send you the requirements. You can open an account from overseas if you wish, and then you can just get started. Of course, you want to learn the basics of the market before you invest. And again, we have videos on our channel that can help you with that. All right. Yeah, so check out our investors for beginners playlist. That should be very helpful. All right, cool. So I think I've answered all the lingering questions. Thanks to everyone again. I really do appreciate your time. I appreciate you showing us that you're still interested in our content, being a part of our community, etc. We are looking to, as I said, ramp up in terms of videos again, because we do have a lot that we're going to have to cover soon on the market. So yeah. All right. Enjoy the rest of your evening, and we'll see you in the very next video.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media